And insurance is something that's pretty close to the heart for a lot of these people because it's this we've built a system that is so interconnected that when you start talking about the insurance market itself, if you have a mortgage, which 62% of the people in the country do, you got to have insurance. You have no insurance, then you're in default. You're in default, and you basically have a piece of property that can no longer be sold on the market and for in terms of financed. And if you're going to pay cash for a house, it's not likely you're going to go put your cash into a home that you can't insure and it's now in a danger zone, which we have 37 million homes that are now at extreme risk. That's $22 trillion worth of real estate. So if you think about, what the risk could be for only 10% loss of that over the course of 20 years, you're talking about, $2.2 trillion in losses. And if you have 62% of that that's insured, or rather mortgaged, now you start talking about a cascading economic crisis that ultimately lands right back with the politicians because most of those mortgages are sold to Freddie and Fannie Mae. And it means that if they go into default, now it's going to be a taxpayer's burden. So,
Agreed.
this is where we're advocating to do something now as opposed to wait until it goes critical.
The whole situation is profound how intertwined everything is. It's a situation of the emperor has no clothes type of,
Yeah, yeah,
like, it's
absolutely.
going to be a wide gasp moment when you realize that everything that we were thinking was true is wrong. But then there's people that just openly ignore it, like companies, where just we gloss over it and it's not necessarily something that's actively pursued because there isn't an incentive to do anything. Like
That's right.
there's no incentive for the property manager or the risk manager on the portfolio side or owner side when you're talking about sophisticated investors. When you thinking about doing an investment, do you buy a new property or do you risk harden the properties in your portfolio? Like what produces more revenue? And then there is not enough incentive if you were to make changes because some of these things don't have, I would say, historical data to back up. Okay, Ben made these updates and it's by XYZ thing and it's innovative and it reduces risk, but we don't have 10 years of results on this. So, well, actually
Problem.
appreciate it, but we're not going to be taking any discounts over here. So you're all
Hmm.
this money you just spent is worthless. And so there's that situation too. And I think another part that we haven't touched on was the financial part where you talked about how there's all this risk, all these real estate value is at risk, but the real estate market doesn't necessarily want to fully admit that necessarily because then they've already developed the land and they've already have the buildings. And there was something apparent. I'm from Florida and there's a lot of development works that were built on, like, not grasslands.
Sinkholes.
Yeah, sinkholes or what is it? Now I'm blanking on the show, but swampland. There we go, swampland. And
There you go.
so like 20 years later, 15 years later, their house is sinking. And it's like, okay, well, no one really made it clear that this was on swampland and now my house is not in stable land and now it's like worthless. I can't sell
Well,
it.
you
I
have
can't
that's
leave.